Millions of investors are making the same mistake when choosing between gold and Bitcoin, and they don't even realize it. Some experts call Bitcoin digital gold. Others believe comparing them is one of the biggest investing mistakes ever made. Before getting started, please like the video, subscribe to the channel, and press the bell icon so you don't miss any future videos. But here's the question nobody asks. If gold is the ultimate store of value, why are millions of investors buying Bitcoin? And if Bitcoin is the future of money, why are central banks buying record amounts of gold? Can both sides really be right? To answer that, we need to go back to two moments that changed the financial world forever, 1971 and 2009. And trust me, by the end of this video, you may completely change the way you think about both gold and Bitcoin. On August 15, 1971, U.S. President Richard Nixon made one of the most important financial decisions in modern history. He ended the gold standard. For the first time, the world's reserve currency was no longer backed by gold. From that moment on, governments gained the ability to create money without being limited by gold reserves. For decades, the system worked. Then came 2008. Lehman Brothers collapsed. Banks failed. Governments printed trillions of dollars to save the financial system. And just a few months later, an anonymous person named Satoshi Nakamoto launched Bitcoin. But here's something fascinating. Inside Bitcoin's very first block, Satoshi embedded a newspaper headline. The Times 03/Jan/2009 Chancellor on brink of second bailout for banks. This wasn't just a timestamp. It was a message. Bitcoin wasn't created to compete with gold. It was created because some people stopped trusting the financial system itself. But if Bitcoin was created to fix the financial system, why are governments still buying gold? Because gold has something no other asset has. A 5,000-year track record. Gold has survived wars, recessions, hyperinflation, currency collapses, and even the fall of empires. And here's the shocking part. In 2024, central banks bought more than 1,000 tons of gold for the third consecutive year. Think about that. The institutions that print money still choose to store wealth in gold. Why? Because gold isn't designed to make you rich. Gold is designed to stop you from becoming poor. That's why during times of fear and uncertainty, investors continue returning to gold. But there's one thing gold struggles to do. Create extraordinary wealth. And that's where Bitcoin changes everything. When Bitcoin launched in 2009, most people laughed at it. Some called it fake money. Others called it a scam. Yet today, Bitcoin has become one of the best performing assets in modern financial history. Why? Because Bitcoin introduced something revolutionary. Absolute scarcity. There will only ever be 21 million Bitcoin. Ever. Not 22 million. Not 25 million. Just 21 million. And in a world where governments continue creating more money and debt, that idea became incredibly powerful. Imagine two investors in 2013. Investor A buys gold. Investor B buys Bitcoin. The gold investor protects purchasing power. The Bitcoin investor experiences multiple crashes of over 70% but potentially creates life-changing wealth. And that's the part most people never understand. The hardest thing about Bitcoin wasn't buying it. It was holding it. Because extraordinary returns usually require extraordinary patience. This brings us to billionaire investor Ray Dalio, founder of Bridgewater Associates, the world's largest hedge fund. Interestingly, Dalio owns both gold and Bitcoin. But if forced to choose, he says he still prefers gold as a long-term store of value. Why? Because gold has already proven itself. Bitcoin still has to prove itself. And perhaps that's the biggest difference between these two assets. Gold is trusted because of its past. Bitcoin is trusted because of its future. Neither side is irrational. They're simply making different bets. So what's the honest answer? Imagine two investors. Investor A puts $10,000 into gold and holds it for 20 years. Their goal is to preserve wealth, reduce risk, and sleep peacefully during market crashes. Investor B puts $10,000 into Bitcoin and holds it for 20 years. Their goal is to maximize long-term growth and accept extreme volatility. Who's making the better decision? The truth is, both investors could be right. Because gold and Bitcoin aren't really competing against each other. Gold protects wealth. Bitcoin attempts to create wealth. The best investment isn't the one with the highest returns. It's the one that matches your goals, your risk tolerance, and the future you believe in. If you enjoyed this video, please give it a like, subscribe to the channel, and press the bell icon so you don't miss any future videos. Thanks for watching, and I'll see you in the next video.